So I want to talk about manufacturing. And if I were you, anytime you're learning new material, remember one of those forms of learning is read write. So and if you are engaged in listening, you got a pencil in your hand, right? Okay, read write. So taking notes is a good way to learn. Now, see, what are they? Oral, hearing something you learn, if you're, and everybody has their preferred form of learning. Visual is another, seeing it. Some people have to see it, some people have to hear it, and some people want both. Read, write. So that's reading it, writing it down. You get that muscle memory. You remember writing that down. Your brain records that differently. And then the last one is kinesthetic. So what I like to do is introduce it, give you time to chew on that before we start actually using it, kinesthetic in a problem to solve a problem. Okay. So this is manufacturing. I've probably drawn this picture about a million times or so. Who could draw this picture for me? Why could you draw it? I'm sure you could. This is what we call the flow of costs in manufacturing. What's this? What is this? I don't know. It's my smoke dust stack. That's the factory. I can draw it one. That looks like a a drone. Okay, all right, so talking about a flow of cost. So you need to write this down because I'm going to expect you to remember it, okay? So this is how we flow costs in manufacturing. And I like to do, actually took some kids to a factory last semester, hope to be able to do that again. I don't know if I can work it out this semester, I'll try. It's kind of cool to actually see this in motion. And maybe in my next life, I'll run a factory. I think it'd be kind of cool to do that. Okay, so we start. We have three types of costs in manufacturing. Who can tell me what they are? Only three costs in manufacturing. Labor. What else? If I'm making shoes, what do I need? Material. And a place to make it, right? Okay. Okay, so we buy materials, we purchase raw materials. Okay, we bring them into the storeroom. As we need them, we transfer them from the storeroom into the factory. In the factory, we have everything that we're working on, called work in process. Work in process. So we bring the materials in. We have to apply some labor, right? We still need humans. And some factory overhead. So our three costs in manufacturing are direct materials, and we call them direct materials. And because it's called direct materials, you assume there's some indirect materials, right? Direct materials is everything that becomes an integral part of the product. So if we're making shoes, what's an integral part? We got, well, say we're making tennis shoes. So some rubber, maybe some plastic, some strings, the little eyelet things, maybe some leather. Okay, so those are materials that go into our product. So direct materials are the materials that become an integral part. So now if we use a little bit of glue, that's not an integral part. Okay, so glue would not be a direct material. It would just be an indirect material. Okay, does that make sense? So it needs to be a significant or integral part of the product in order to be called a direct material. Okay, and then of course we still have to have humans. So direct labor So by that, we assume that there must be some indirect labor, right? Direct labor are the people who actually assemble the product. They're actually touching the product and assembling it. Indirect labor, who do you suppose they are? They work in the factory, but they don't touch the product. Remember, this is all inside the factory, not in the storeroom, not in the warehouse. This is all inside the factory. Supervisors, materials handlers, maybe quality control people. So people that actually work in the factory but do not assemble the product are called indirect labor. Okay, direct labor, they are actually assembling the product. Okay. All right. Everything else in the factory, I said there's only 3 costs. If the cost does not fall into direct materials, and we know what that is, or direct labor, it must be factory overhead. There's only 3 costs. If it does not fit into one of those 2, it is factory overhead. Somebody tell me what might fit into factory overhead. It's going to be a cost in the factory that is not direct materials and is not direct labor. What? For whom? Exactly. So if direct materials is a separate category, indirect materials or indirect labor and indirect materials must fall into factory overhead. Okay, does that make sense? So if we have glue that we're using in the factory, cleaning supplies, right? Toilet paper, got humans must have to have toilet paper, right? Okay. Clean rags for cleaning machines, oil for the machines. Can you think of any other indirect material that we use in the factory? Pencils. Okay. So anything like that, any kind of supply item that we use in the factory that does not become an integral part of the item is going to be indirect materials, and that's a part of factory overhead. The supervisors, the material handlers, the quality control people, we said they are what? Indirect labor. So they're part of factory overhead. Indirect materials, indirect labor, part of factory overhead. What about the utilities? Got to have utilities. It doesn't fall into one of those categories. It must be factory overhead. Taxes on the building, taxes on the equipment, right? Insurance on the building, insurance on the equipment. Do we have insurance on the equipment? We better have, right? What if the building burns down and all your equipment's in that building? If you don't have insurance, you're out of business, right? If you have insurance, you're going to have money to be able to buy all that equipment back. Actually had a client had that happen one time. Building caught fire. Somebody was smoking meth in the back of the building and set it on fire, burned up all the equipment. Fortunately, he had good insurance, so he was able to go back in business. What?
Actually happened.
Actually happened. And he actually made a huge profit on the insurance company. Does that make sense? Because the equipment had been used for many years, but of course the insurance company paid him fair market value. So my challenge as his tax accountant was to keep him from having to pay tax on that money. Because of course, if you get a couple $100,000 in insurance money and you have to pay 25 or 30% of it out in taxes, then that's only going to leave you $140,000 to rebuy equipment. So fortunately, there's some provisions in the tax law that keep you from having to pay tax on that as long as you're going to replace that equipment. So a good tax accountant will help you do that. Okay, so that's why you need to understand a little bit about tax. You know, even non-accountants, anybody that wants to run a business ought to understand a little bit about tax, right? Because you can really screw yourself up, or you can be the hero just because you understand a little bit about tax law. All right, so insurance on the building, insurance on the equipment. taxes. We have to pay property taxes on equipment. You believe that crap? You also have to pay property taxes on inventory. So the taxes that we have to pay, factory expense that is not direct material, direct labor, so therefore it must be factory overhead. What else? Repairs. Repairs on the equipment. Oftentimes, a company repairs and maintenance will have a maintenance contract on all that equipment. So if something breaks down, they have a contract that the manufacturer has to come in and fix it.
Depreciation kind of go.
Exactly. So also depreciate, if we own the building, we're going to depreciate it, right? What is depreciation? The using up, who said that? Of a fixed asset. I'm going back on you. Using up of a fixed asset. What's a fixed asset? Long-term, tangible, and being used in the company. Very good. Okay. And of course, it's getting used up because we're using it in the business. So the building's going to depreciate. If we're using it, then it's going to depreciate. That's going to be factory overhead. The equipment, if we own the equipment, could be leased, right? So it could be a lease expense. The building could be leased. So that might be rent expense on the building. Either one. So either the rent is factory overhead or depreciation on the equipment if we own it is overhead. Good. Depreciation. Okay, can you think of anything else? All the other costs of operating the factory, they fall into three categories. All right, good. All right. All right, so, and that's what we call work in process, because we don't have crap in the factory if it's not being worked on. If it's not being worked on, it's still in the storeroom. We don't need to be bogging down the factory with stuff that's not being worked on. All right. Once it gets completed, it moves into the warehouse and it's ready to be sold. So this is what we call finished goods. Good guess. Finished goods. Okay. And then once inventory gets sold, it becomes what? Remember, it was on the income statement. When inventory gets sold, it becomes cost. Who said that? Cost of goods sold. Cost of goods sold. Okay, makes sense? That's what we call the flow of cost. All right, so of course, this arrow is direct materials used, because these are materials that are coming out of the storeroom and to be used in the factory. So that's direct materials used. This is direct labor coming in, factory overhead coming in. Notice the arrows. Raw materials is the only thing that comes into the storeroom. Then you have all three of your costs coming into the factory. Then your output is cost of goods manufactured. Makes sense? Manufactured, finished, completed. Cost of goods manufactured. Cost of goods sold. Okay. And then this, of course, cost of goods sold as it flows into there. Okay, make sense? Flow of cost. I'm going to give you the formula to go with that. That's not going to be applicable. Any questions about that? Make sense? Could you teach me the flow of cost? Yes, sir.
What is the DL there?
Direct labor. DM is direct materials. Okay. I don't think so. Yeah. So we're going to do, I think so. Well, we could do a cost of goods manufactured. That'd be kind of cool.
Yeah, that one's easy. That's just how they.
So should I give them the formulas? Will help them understand the cost of goods manufactured?
Yes.
Yeah.
I mean, it's pretty easy. It's self-explanatory. You just have to look at it. It's inside. If you know how to draw it, you can get it.
All right, let's do it. So these are the formulas for calculating each of the three arrows. Okay, so a little discussion about whether or not I need to introduce this formula. You know, we'll throw it at you. Okay, so this formula. So each of these are an inventory account. Okay, so if we're a merchandiser, what does a merchandiser do? They buy crap from China, mark it up and sell it at a profit, right? Well, sometimes we buy it in the United States. Okay. Manufacturers buy stuff, mark it up and sell it at a profit. Merchandisers buy stuff that's already been manufactured, mark it up and sell it at a profit. Okay, manufacturers buy raw materials and produce it or manufacture the item. So if we are a business, and we've studied those so far, right, that are merchandisers. So they have one inventory account, it's called inventory or merchandise inventory. But if we're a manufacturer, then we looked at a couple of these two, or at least one, that had materials, work in process, and finished goods. So we know that's a manufacturer because we never stop manufacturing product. We know that a manufacturer has to have 3 different levels of production because they're always going to have raw materials on hand. They're always going to have some stuff that's in process and some stuff that's finished and not yet sold. Okay, does that make sense? So if I'm looking at a balance sheet, I can tell whether it's a merchandiser or a manufacturer. Good? Okay. All right. So since these are inventory accounts, who can tell me the formula for cost of goods sold? You're giving me gross profit, sales minus cost of goods sold. Begin inventory. If we were a merchandiser, it's easier. Beginning inventory plus purchases minus ending inventory equals cost of goods sold. Little bit more difficult if we're a manufacturer. Okay, so this is for a merchandiser, and that makes sense, right? Merchandiser. We have stuff that we purchased. We bought some more. We count what's left at the end of the year. Anything that's missing is cost of goods sold. And usually I get a question like, well, what if it was stolen? Is it still cost of goods sold? Sorry.
Say plus purchase.
Purchases. Yes. So inventory that we purchased. So beginning inventory, we had some stuff. Purchases, we purchased some more stuff. And then we count what's left at the end of the month, quarter, or year, whatever the case may be. Whatever is missing is cost of goods sold. So whether it was sold, stolen, broken, deteriorated on the shelf, it's still cost of goods sold, right? Because it's a cost of having inventory hanging out there in the public for people to steal it, break it, and deteriorate. Okay, make sense? So this is the formula for a merchandiser to calculate cost of goods sold. Make sense? Now for a manufacturer, a little bit different. So this is the cost of goods sold formula. Of course, we're not going to sell anything that's in process or any raw materials. We're only going to sell finished goods. So we have to modify it just a little bit. Beginning finished goods inventory plus what's our only input? Cost of goods manufactured, which is what increases finished goods, and subtract ending finished goods inventory equals cost of goods sold. That's how we calculate that cost. So that is this arrow. To calculate this one, similar. We had some stuff in the factory. What's it called? Beginning work in process. Come on, don't be afraid. So beginning work in process inventory plus what? Right. What's your 3 arrows coming in? So we're going to add those. So we could say direct labor plus direct materials plus factory overhead, or as Wyatt says, we also call those manufacturing costs. Same thing, manufacturing costs. That's our 3 costs. And then subtract what? Ending work in process inventory equals what? The output. Cost of goods manufactured. And that's how we get that number. Does that make sense? All right. Now, who can do this one? Anybody except Wyatt? Who can do that one? Using this pattern. Who can give me the formula for direct materials used? Yes, because that's your input. Good one. Minus ending materials inventory equals. It's actually materials used. Some companies will have their indirect materials and their direct materials in the same location. So if we take materials used and subtract indirect materials, that will give us direct materials. What's that number?
We need to do that last part, minus indirect materials, get.
Yes. Because that's the only way you're gonna get it into the factory. What do you think? Kind of cool?
Materials used minus.
Indirect.
Minus indirect materials used. So flow of costs.
They probably won't have.
They'll recognize it on cost of goods manufactured.